There is some big news for Alibaba shareholders. The Wall Street Journal reports that Alibaba Group Holding boosted its share buyback program to $25 billion from $15 billion in a bid to reassure investors about the company's prospects after a year in which its stock has fallen by more than half. Alibaba shares are up 13% today. My cost basis is around 122 or 123, so I'm feeling pretty good. But I want to talk about buybacks in general because this is something I've learned a lot about from Warren Buffett, and it's an important lesson because, not all buybacks are created equal. Just because a company is buying back their shares, that doesn't always mean it's good for shareholders. That's clearly not the case with Alibaba. The only time you want to see management buying back shares is when they believe that's the best use of their cash. Consider it almost like a value investment. Warren Buffett, I think this was back in 2012, he received a call from none other than Steve Jobs. Steve Jobs said, "Hey Warren, Apple has a lot of cash. What should I do?" Warren Buffett talked through all the potential things they could do with that cash. Pay out a dividend, you could acquire some companies, or you could just sit on the cash. He told Steve Jobs that if he felt like the company was undervalued, he personally would use it to do buybacks. And the bigger idea here is that if you feel like your company is undervalued, if that's what management truly believes, then buybacks are really good for shareholders. Now, the reasons might be obvious, but maybe they're not. Warren Buffett would tell you that when the management of a business that you own repurchases shares, it increases your ownership in that business. Your interest in that business goes up. As an Alibaba shareholder, something I like about these buybacks is it's not as if they're doing it instead of investing back in the business. In fact, Alibaba's been investing aggressively in their cloud computing business. In April of 2020, Alibaba said that they would be investing $28 billion into their cloud computing business. And this would be over a 3-year period. So that's another thing to consider when you see a company doing buybacks. In the case of Alibaba, I feel like this is just a win across the board. It increases our interest in the business. The management is sending a signal that they are confident in their ability to be successful moving forward, despite of the regulatory environment that we've discussed. And it's not as if they're doing these buybacks at the expense of something else, because Alibaba has been investing aggressively in their future growth, which is, I believe, good for shareholders because I believe in what they're investing in. And I think the cloud computing business is a no-brainer. That's just my thoughts. Again, every business is a little bit different. It's a good sign for us as Alibaba shareholders. I'm excited to see the price get back to my cost basis. Even though I'm a long-term shareholder, it still feels good to see things move in that direction, considering just 7 or so days ago, we were in the 70s and now we're up to 115. It's been a wild ride. I'm sure it will continue to be wild, but stay tuned to CMQ Investing. We will be covering Alibaba intensely. It's a big piece of my portfolio. It's about 10%. No matter how it does, this will be entertaining to watch me ride this roller coaster. I appreciate you watching. I hope you'll subscribe, give it a thumbs up, leave a comment with your thoughts if you have any. And again, I appreciate you tuning in. My name is Chris Franco. We'll talk soon.